Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Form 8K filing, which is basically a company shouting, hey, something important just happened. In this case, it's about money, specifically how People's Financial Services Corp just borrowed a whole bunch of it, so it's time to see what they will spend the money on my end. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, where we can talk even more about companies and their reports. People's Financial Services Corp, a company you might not hear about every day, just reported that they've made a big financial move on June 6, 2025. They've sold a bunch of what they call subordinated notes. In simpler terms, they borrowed $85 million. These subordinated notes are basically IOUs, and they're calling them 7.5% fixed to floating rate subordinated notes due 2035. That's a mouthful, so let's break that down. The 7.75% part means they're paying 7.75%, part means they're paying 7.5%, part means they're paying 7.75% interest on the money they borrowed. Fixed to floating means the interest rate starts at 7.75% interest on the money they borrowed. Fixed to floating means the interest rate starts at 7.75% interest on the money they borrowed. Fixed to floating means the interest rate starts at 7.75% interest on the money they borrowed. Fixed to floating means the interest rate starts at 7.75% interest on the money they borrowed. Fixed to floating means the interest rate starts at 7.75% interest on the money they borrowed. Fixed to floating means the interest rate starts at 7.75%, part means they're paying 7.75%, but after a certain date it can change or float depending on market conditions. So what are they planning to do with all this cash? They say they're going to use it to pay off some existing debt, and for general corporate purposes, that could mean anything from investing in new technology to expanding their business or probably just paying some bills. The interest rate is 7.75% until June 15, 2030. After that, things get a little more complicated. The interest rate changes to what they call the 3-month secured overnight financing rate, plus 4.1 secured overnight financing rate, plus 4.10%. This rate changes every 3 months, so the interest they pay could go up or down depending on what's happening in the financial markets. This means they might pay more or less than 7.75% after 2013. The company can also choose to pay back the debt early, but only starting June 15, 2030. They can redeem or buy back the notes on any interest payment date after that. There are also some special situations where they can redeem the notes early, but that's only if certain events happen. Of course, they need to get permission from regulators first if required. To make these notes more attractive to investors, the company also agreed to something called registration rights agreements. Basically, they promised to try to register these notes with the Securities and Exchange Commission so that they can be easily traded, because it's easier to sell officially registered items than grey market items. If they don't meet their obligations under these agreements, they have to pay even more interest to the note holders. All of these notes were issued under an agreement called an indenture, which was created on June 6, 2025 between People's Financial Services Corp and US Bank Trust Company. These subordinated notes are intended to qualify as Tier 2 capital for regulatory purposes. Banks need a certain amount of capital to operate safely. Tier 2 capital is basically a second layer of capital that can help the bank absorb losses if things go wrong. So this move is likely aimed at strengthening their financial position. If you want to dig deeper, they've included the legal documents related to this deal as exhibits to this report. This includes the subordinated note purchase agreement, the registration rights agreement, the indenture, and the form of subordinated note itself. Finally, the company issued a press release on June 6, 2025, announcing the completion of this offering. This is part of what's called Regulation FD, which aims to make sure that all investors get the same information at the same time. Now let's step back and look at what this all means. People's Financial Services Corp has essentially taken out a pretty big loan. The interest rate isn't terrible, but it's not exactly cheap money either. The fact that they're using the money to pay off existing debt suggests they might be trying to clean up their balance sheet or refinance at potentially better terms. The floating interest rate after 2030 is a bit of a gamble. If interest rates go up, they'll be paying more. If they go down, they'll be paying less. Whether this is a great move or a risky bet really depends on how interest rates behave over the next few years. It could either save them money or cost them more. The move to qualify these notes as Tier 2 capital is a smart one, as it bolsters their financial stability from a regulator point of view and allows them to continue growing and operating without worry of the regulatory body. Overall, it feels like People's Financial Services is playing it relatively safe. They're not making any wild bets, but they're also not exactly breaking new ground. It's a pretty standard move for a financial institution looking to manage its debt and capital. Alright, that's our breakdown of People's Financial Services Corp's latest debt deal. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.